Welcome to our 26th Trader Chat. My name is David Hickson and the date is the 9th of May 2012. And as always, we need to start the proceedings by going through our legally obliged disclaimers. Our first disclaimer tells us that all trading involves risk. Please be aware of and accept this risk before trading and never trade with money that you cannot afford to lose. The second disclaimer warns that past performance of any trading methodology is no guarantee of future results, and no representation is being made in this webinar that any account will achieve profits or losses similar to those discussed. Also be aware that all results should be considered to be hypothetical unless otherwise specified, and hypothetical performance results have many inherent limitations and, unlike an actual performance record, do not represent actual trading. A few pointers about using NetViewer. I see several new names there, which is always good to see. So NetViewer is the software that we use for our Trader Chat webinars. The first thing you should know is that the easiest way to ask a question is to type a message into the chat window. If you cannot hear me, then you need to slide that speaker slider up to the right, which is separate to your system volume. If you'd like to speak to me, I don't know why I still do this because nobody's spoken to me for a really long time, you should right-click and also please enter a chat message to indicate that. Also, please be aware that your mouse clicks in the NetViewer window pop up brightly colored arrows and speech bubbles and so on, which can be a little bit distracting. You should know by now that we also have Breakaway Chats, which are smaller groups. The first of those Breakaway Chats takes place every Thursday at 11 a.m. UTC, so that is 2 hours earlier than today's Trader Chat, our Wednesday Trader Chats. They take place on Thursdays. They're specifically targeted at people in the Asian time zone or Asian Australian time zone, so feel free to join us for those as well if that time zone suits you. And right, so let's get down to the business of talking about the markets. And here we go. I have a chart of the S&P 500 open in Sentient Trader because I thought that today we would. Sorry, let me get this taskbar out of the way. I can't seem to hide the taskbar. Never mind. So what we're going to do today, I thought, was just talk generally about the markets and what's happening in the markets at the moment and discuss various possibilities and how we will know what the true cyclic picture is as it unfolds. I see some messages. I think they're all hello messages, and got something terribly complicated going on with data, but the rest are all just greetings. Good. If you have any questions at any point or any specific thing that you would like to ask, then please, of course, type a message into the chat window, and I will do my best to answer your questions live on Trader Chat or, if necessary, by email later. Right, so let's take a look at what's happening in the S&P 500 and what the possibilities are and what seems to be occurring according to Hurst's cyclic principles. First of all, in fact, let's zoom all the way out and the right way and start having a look at this analysis in terms of the really long-term picture. And here you can see I'm displaying a monthly chart of the S&P 500, and if I show some semicircles, then we can see what's happening in the longer time frame. This particular chart or this particular analysis is one that I have tweaked slightly to disregard, if you like, what happened in 2003 and before that. Some people might raise their eyebrows about that and ask whether that's really wise. I think there isn't really a problem with doing that because and way back here 9 years ago is no doubt of great academic interest to everybody, but in terms of actually making trading decisions and understanding what's really happening now, I'm not too worried about it. So in this particular analysis, I've ignored it. I have other analyses where I try and resolve some of the dilemmas of the 2003 trough and the possibly straddled 2007 trough, and then of course the very major trough in 2009. This particular chart, I'm not dealing with those issues. So what I tend to do is when I'm building an analysis or building a chart, I concentrate on what I'm trying to achieve for each particular chart. And this particular chart is not resolving anything that has happened 12 or 9 years ago. Okay, what I'm doing is I'm really looking at how can I get the best analysis for right now. Having said that, you'll see that in this workspace I have 6 charts, and this is only one of them, and this is my sort of recent up-to-date chart, if you like. Okay, so the longer-term picture in terms of this analysis is telling us that there was a major trough in March of 2009, of course, and what model am I using here? This particular analysis is stating that that was a trough of the 54-month cycle. Whether it was a trough of the 54-month cycle, whether it was a trough of the potential and unconfirmed 6-year cycle, or whether it was a trough of the 9-year cycle, I don't know, and I'd love to debate it, but that would take several hours, so I'm not going to spend too much time on it in today's Trader Chat, because what I want to speak about is what's happening in the markets at the moment. But certainly in terms of knowing what's happening in the market at the moment, I'm very happy that this analysis places a very long-term cycle in March of 2009, because that makes quite a lot of sense to me, and one of the ways that I like to do that, I see there's a chat question flashing. Question from John. You have gone with 2009 as the 4.5 and 9-year bottom then. That's a phasing change I have made since last fall. Okay, great. Is that sounds like is that John from Canada? Is that you, John? John Eastreich, because I know we were discussing the 4.5 and 9-year bottom. Yes. Okay, good. Yes, absolutely, John. And I've been reading with great interest your posts on the forum about that, and I know that you have you've come out of the closet and you have admitted that the 2009 trough might be 4.5 years or 9 years, as opposed to the sort of previous analysis that for many years we were looking at, which was that it was only 18 months. And I think that I'm completely with you in terms of that, and certainly this analysis takes that approach in terms of positioning that 4.5-year cycle trough in March of 2009. And I'm interested to see that you think it's also a trough of the 9-year cycle. I haven't spent a lot of time investigating that idea, but I've read your forum posts, which present a very convincing argument that might be a trough of the 9-year cycle. So that's been a very interesting change. I know that when we were together in Canada last October and we discussed things, you started suggesting that maybe that trough in March of 2009 should change its magnitude in terms of the general analysis that we've been discussing. We have been discussing for a very long time on these Trader Chats. So yes, I'm very pleased to hear that you have change your opinion about that, because I think that certainly fits what's happening at the moment in the markets. One of the ways that I like to just visually immediately know whether an analysis works for me, because I tend to be quite a visual person, is I zoom in to get the sort of picture that we're seeing here now. I turn on my semicircles, and if the markets generally sort of fit into that sort of semicircle picture, and generally I fiddle around with the zoom level a little bit to see whether that's the case, then I take that as an indication that that indeed the analysis is working. So let me show you what I mean. Here you can see I've turned on my semicircles, and here is the 4.5-year cycle, which, as John says, is probably correctly phased with a trough in March of 2009, and this orange semicircle, I'll draw sort of a dashed line over it so I don't cover it. That orange semicircle is a very rough graphic visualization, if you like, of what that 4.5-year cycle should be doing to the market. If I find that price fits neatly under that or within that semicircle, then I think that's an indication that that the analysis is a fairly good one. And certainly price fitted very nicely into that semicircle all the way up until the end of last year. It must have been about December 2011. When suddenly price, of course, shot up and jumped right over to the other side of that semicircle. Now, the level of that semicircle is of absolutely no importance, okay? CentiTrader simply draws a semicircle as literally half a circle. So it measures the distance in terms of the time, the date, and it draws half a circle there. So the level of the semicircle has absolutely no relevance. And you need to be careful of doing what I often do, which is I my zoom level so that that semicircle actually forms what looks like a sort of a moving resistance or support line. There we go. As I adjust my semicircle, you can see that I've adjusted in such a way that it looks as though that semicircle is actually a resistance line, forming a bit of a ceiling to the market's movement. But that's completely arbitrary, okay? That level has no real significance. But, of course, a visualization of a cycle as a semicircle is very useful for seeing whether, whether the cycle has any validity in the market. And it's quite interesting that in December, the market simply jumped through that semicircle. The level mentioned is arbitrary, but the fact that that the market suddenly jumped through there is quite an interesting event, if you like, because the market, from following very nicely this semicircle and very clearly sort of describing that 4.5-year cycle, very clearly described what was happening in the market, suddenly the market just completely broke through it and denied it. So I'd like to say a few things about that. First, I see some more things happening in the chat windows. John has been thinking this 4.5-year cycle will contract and the low will probably be a bit earlier, December, January, but a good 40-week cycle low is due in June. Okay, so that is really fascinating. And Jose has asked the obvious question: do you think it will contract because it's the first 4.5-year cycle? And I could tempt John to open his microphone and he can actually explain to us. I don't know if you have a microphone attached, John. If you do, then I'd be delighted to open up your microphone and you can chat to us. If you don't have a microphone, then of course we can continue the rather stilted chat message conversation. But for those of you who perhaps you don't have a microphone, okay, saved by the bell. So for those of you who are wondering what this discussion is about that's taking place in the chat window in terms of the 4.5-year cycle contracting, let me try and shed a bit of light on that. One of the main principles of Hurst's cyclic theory, one of the principles, in fact, Hurst's cyclic principles, is the principle of variation, which tells us that the wavelengths of cycles vary.